Right now, while you're watching this video, 3 regional banks are losing customers to digital-first competitors they've never heard of. These aren't the big names like Chase or Wells Fargo. These are fintech startups that launched 18 months ago and are already processing more transactions per day than banks that have been in business for decades. If your institution thinks you have time to plan your digital transformation, you're already behind. Welcome back to Advanedge Consulting. I'm walking you through the harsh reality that's hitting traditional banking right now. Over the past 4 episodes, we've dissected how digital-first competitors are reshaping finance, and today we're diving into implementation, the phase where most transformation initiatives either accelerate success or completely derail. The gap between traditional banking and digital-first competitors isn't just widening, it's accelerating exponentially. Every day your institution delays modernization. Startups are capturing market share with technologies that make your current systems look like they're running on telegraph wires. We're not talking about minor competitive pressures here. We're talking about fundamental shifts in how customers expect to interact with financial services. Here's what most banks and financial institutions are missing, and I see this pattern repeatedly across our client base. Leadership teams are treating digital transformation like a long-term strategic initiative when it should be treated like an emergency response. Just last month, we worked with a community bank that was losing 20% of their commercial lending pipeline to fintech competitors. Not because their rates weren't competitive, not because their relationship management was lacking, but because their loan origination process took 14 days when competitors were approving similar loans in 48 hours. The executive team kept saying they needed more time to evaluate their options. Meanwhile, their loan officers were watching deals walk out the door every single week. Here's the data that should terrify every banking executive. Institutions we've worked with are reporting that customer acquisition costs have increased by an average of 37% in the past 2 years. Why? Because digital-first competitors are setting the expectation bar so high that traditional banks now have to invest significantly more in marketing and incentives just to remain relevant in their own markets. But here's what's really disturbing. Most banks don't even realize they're competing against these digital-first players until it's too late. We recently helped a regional bank analyze their customer churn, and they discovered that 43% of departing customers weren't moving to traditional competitors. They were moving to fintech platforms the bank had never even researched. The competitive landscape isn't just changing, it's completely restructuring around technologies that most traditional institutions are still treating as experimental. One institution we worked with was spending 18 months evaluating blockchain integration while their customers were already using blockchain-based payment systems from 3 different fintech providers. This brings us to the technology reality that's reshaping finance right now. Artificial intelligence, blockchain, and digital payments aren't emerging technologies anymore. They're baseline expectations. When we conduct digital readiness assessments, we consistently find that institutions are underestimating how quickly customer expectations are evolving. Let's talk about core banking modernization, because this is where the rubber meets the road. The big 3 core banking providers, Fiserv, Jack Henry, and FIS, serve approximately 70% of U.S. banks. These platforms are powerful, but here's what we see repeatedly. These institutions are running modern marketing campaigns and digital customer acquisition strategies on core systems that were designed for a completely different banking environment. We recently completed a core system assessment for a bank running a 15-year-old FIS implementation. Their customer-facing applications looked modern, but behind the scenes, simple account modifications required manual intervention from 3 different departments. Meanwhile, digital-first competitors were processing similar requests instantaneously through API-driven workflows. The modernization patterns we see across successful transformations share common characteristics. First, leadership teams stop treating technology upgrades as IT projects and start treating them as business survival strategies. Second, they prioritize customer experience workflows over internal process preservation. Third, they integrate modern lending technologies that can compete with fintech speed and efficiency. Speaking of lending, this is where we see some of the most dramatic competitive gaps. Traditional loan origination processes are getting absolutely demolished by fintech competitors. However, institutions that implement modern loan origination systems like Abrigo, are completely changing their competitive position. Abrigo accelerates lending workflows in ways that allow traditional institutions to compete directly with fintech speed, while maintaining the relationship advantages that community and regional banks have always provided. We worked with one institution that reduced their commercial loan approval timeline from 12 days to 3 days after implementing Abrigo's loan origination system. The result wasn't just faster processing, it was a complete transformation in how loan officers approached customer relationships. Instead of spending time on administrative workflows, they could focus on deal structuring and relationship building. But here's what makes the difference between successful implementations and failed ones. Integration strategy. The institutions that succeed don't just implement new systems. They redesign their entire operational workflow around customer experience optimization. Now let's talk about practical implementation, because this is where Advanedge helps clients navigate the complexity that destroys most transformation initiatives. Digital payments integration is non-negotiable at this point. We help institutions implement payment systems that don't just process transactions. They provide real-time analytics that inform customer relationship strategies. The banks that understand this are using payment data to identify lending opportunities, detect business growth patterns, and predict customer needs before customers even realize those needs exist. System integrations are where most implementations fail, and it's usually because institutions try to preserve too many legacy workflows. We guide clients through integration strategies that prioritize customer experience over internal convenience. This means some departments have to change how they've operated for decades. But the alternative is watching customers migrate to competitors that prioritize their experience over your internal processes. Regulatory navigation is critical throughout this entire process. Digital transformation doesn't happen in a regulatory vacuum, and the institutions that succeed are those that build compliance considerations into their technology strategy from day one, not as an afterthought. The implementation timeline that works: 90 days for core system integrations, 60 days for loan origination system deployment, and 30 days for digital payments activation. Institutions that extend these timelines usually end up with scope creep that derails the entire initiative. Here's what we tell every client: your competition isn't planning their digital transformation over 18-month timelines. They're launching with modern technology stacks and capturing your customers while you're still in planning meetings. The future belongs to institutions that understand this simple reality. Customer expectations are being set by the most advanced fintech platforms, not by traditional banking standards. Every day you delay modernization, those expectations move further away from what your current systems can deliver. The institutions that will dominate the next decade are those that stop thinking like traditional banks and start operating like technology companies that happen to provide financial services. This isn't about abandoning relationship banking. It's about delivering relationship banking through technology, platforms that customers actually want to use. Transformation isn't optional anymore. It's survival. Knowing isn't enough. The next step is where most businesses fail: